Good morning, everybody. Welcome back to Schwab Coaching. It's our Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from a sunny and beautiful Denver, Colorado today on Wednesdays. Pleased to be joined by my friend and fellow Schwab coach, Brent Morris. Good morning, Brent. How you doing?
I'm doing good, Kevin. Glad to be on today, and I'm not hearing any sub-zero temps from you today there. So glad to hear. So first time in like 2 weeks.
I also am glad to be lulled into a false sense of security about the nice weather here. This is common approach as we get in February. Tend to get a little bit of a fake out, if you will. So I'm certain I will be complaining about snow in the coming months, weeks and months here. So don't you worry. Brent, we got plenty to get to today because today is NVIDIA's announcement day. We're going to have earnings after the bell. But we've had a lot of big moves in the market over the last 3-4 sessions. So we want to cover a lot in the way of levels on the major indices, look at some specific sectors, and of course, we've got a few stocks in the news. So let's get right to it, everybody. Follow the three of us, Brent and me. And today we're joined by Cameron May in chat. So follow us on X, Kevin Horner, CS, Brent Morris, CS, and Cameron May, CS. And of course, if you like today's discussion, the conversation we have, please be sure to hit that thumbs up button down below for us, which will help us out in the archives when we get this into the YouTube for you so everybody else can see it. Those of you who are here live, obviously, get a little bit of an added boost. You get to be here and get questions answered, hopefully. So please feel free to post in the session or in the Q&A there for the duration of our segment, everybody. We go about 45 minutes in total. Let's remind you that our discussion here is exclusively for your information and your education. Simply put, we do not make recommendations nor endorsements for any particular approach or strategy to trading the market. We do, however, talk a lot about technical analysis here in this conversation, the technical analysis process, strategies traders may choose to employ. But it's important to remember that technical analysis is just a piece of the puzzle. We do not encourage you to base decisions exclusively off technicals. Now, if you're new to our segment, this is our agenda. We go through a broad market review, starting with the major indices, working our way into sub-industries, sectors, etc., that might be moving around. And like I said, we've had some significant moves of late that are going to help us understand some of the next areas where traders may choose to take action, depending on their level of bullishness or bearishness, of course. So let's get into it, Brent. Let's talk about some of those levels as it relates to the SPX today, which has undergone a pretty healthy pullback. And I say healthy, and yet it's not huge, Brent. 61.47 to where we are today, 59.67, currently down less than 200 points from our all-time highs. What are you watching here on the SPX at this point?
Well, to lessening of momentum, I guess. You can see we've had as you said, a decent pullback, but 3 days ago we had a big candle, then a smaller candle, then yesterday we kind of had almost a hammerish type candle, and I don't know where today's going to end up. It's too early to tell, but are we going to pick up support kind of where we're at? We broke our moving averages. We broke our 50. We broke our 20-day moving average. Mm-hmm. Yesterday we tested kind of that low, or that gap, I guess the low of the gap up there from there in January. And are we going to hold that today? Signaling that downward momentum is maybe changing. You can see that actually reflected in the RSI as well, Kevin. Actually starting to roll up a little bit. That's no guarantee it's going to continue that way. But it seemed like a lot of negative sentiment just in the last few days. But as you mentioned, it's not like a major game changer in terms of this index. The index is not that far off all-time highs. Mm-hmm. And sometimes, when we do have a pullback, it helps to just have the perspective of kind of looking longer term and seeing, wow, the last few days maybe have been painful, but the reality is it's near where, as high as it's ever been. We're not very far from as high as it's ever been. And sometimes that makes me feel a little bit better when when the market's pulled back a little bit, but it's also kind of a warning that, hey, it could certainly fall a lot farther too.
Absolutely true. And I feel like there's also a key component here, Brent, and that is that if you were evaluating the market in the week prior to the selling we've had and maybe not expected, but said, hey, because the market does what the market wants, and we have very little impact on the directional movements of the market, of course. If you thought, well, if it's going to sell off, here's where it could go, then you may not have been surprised by not just the move down to that ledge, but the bounce we got at that ledge. That's a significant tail there, Brent, and it tells us quite a bit, doesn't it? The idea that the gap zone matters, the fact that we made a gap in here off of a recent low following a drawdown move, hold day, gap and go move thereafter, new highs following it. That really solidifies that 5,900 level of support. So yeah, it would have been easier to manage the last 3-4 days if you said, yeah, I could see a pullback to this area. That makes sense. But what about now? At this point, Brent, I think a lot of traders are thinking, hey, moves through 5,900 mean I have to be able to weather the storm for another potential 200 points thereafter to the downside, to the vicinity of the 200-day moving average, which is in the range of 5,700, 5,715. And that's why we talk about it, right? Because if the odds are increased that we visit the 200-day moving average if we close below my green line on the chart. And I feel like that's something that traders need to at least be thinking is a possibility. That possibility, if it plays out, then they know how to act, right?
Yeah, you have like contingency plans, right? I mean,
Yes.
Yesterday's candle, if you think about intraday action yesterday, we sold off really big in the morning, and then the rest of the day we climbed back up. It was a fairly bullish day after the initial couple hours of the day. It was fairly bullish, and you can see that reflected in the candle. But maybe that doesn't, maybe that's not. We're not going to see a bounce, perhaps. And if it does, we need our backup plan. Whenever you're trading, whenever you're looking at the market, you need to say, look, even if I think one thing, what am I going to do if I'm wrong and it goes against us?
Exactly. We hope that it doesn't, but we prepare for the worst, right? Hope for the best, prepare for the worst. Always have those steps in place so that we know what actions are going to make us feel a little bit more confident with our exposed dollars to the market. So yeah, under 5,900 things can change, but at least for the short run, this looks like matching lows or validated levels of support under which things change. But hopefully what we're looking at is rather a bounce and a trade through yesterday's high, which would be the potential for a continuation of our longer term trend. So what are we looking at there, everybody? 59.93 approximately to the upside. If we trade through 59.93 to the upside and closed above it, there would be some validation or belief perhaps that bulls are back in charge here. So that's what we're looking for, at least in a short-term scenario, to play out, kind of give us a little bit of a heads up here.
Yeah, and just looking at this 1 year chart,
yeah,
it's a trend. That's an upward trend. Look from left to right. The more we zoom in, the more harrowing the latest little drop seems. But the reality is that's not a bad looking chart there.
Yeah, let's as always, we try not to get too far to down the road that shifts our perspective too much, right? We want to find and remind ourselves of what we've been dealing with, and ultimately that's a really strong 2-year bull market from the October of 22 window. So you're looking at longer than 2 years. That's a strong bull market. Let's just call it what it is. Let's not overthink it here. Okay, now NASDAQ, we're up about 0.5%. Very similar scenario playing out, except here, Brent, we have a series of lows. I had drawn in a number, this triangle formation, and we had the break to the upside that just could not sustain. And we've also seen a pretty significant move in terms of the RSI making short-term lows. So that kind of stands out for us here. When you're looking at what's going on here now, Brent, what are the levels that you're maybe monitoring and maybe keeping an eye on to help us understand where maybe our next directional move comes from?
Well, I would say yesterday's low was a biggie. Just similar to the SPX, we have this candle where we tested lows, but by the end of the day, we actually were well off of those. That low yesterday hit some previous lows, previous potential support. To me, that's the next, kind of key level. uh, now, as it now stands, and of course, this can change wildly by the end of the day, we kind of have this bullish Harami type candle. In other words, yesterday you have the big kind of red candle, and today's smaller green candle is within the body of the previous day's candle. After a pullback like we've had, that can signal a turnaround. Doesn't always signal a turnaround, but that's just, it doesn't always portend to turn around, but it does. That's kind of the candle interpretation there on that. Now, if we were to break below that low, well, I'd probably pointed us out to the low that we hit in January. There would be the next potential level. And then from there, I don't know, maybe the moving average would be the next potential level.
Yeah, I really think we're kind of in an odd spot. It's a difficult time frame for the short-term trader, right? A couple of things that call out to me. One, we had this high here, followed by a higher high here. Unfortunately, though, we had a divergent high with our RSI. So we had a little bit of a heads up. Hey, that high might not stick. And of course, as soon as I guess the way the traders might have really known it was, as we fell through the low of the high day, we bounced back a bit here on, I think it was Thursday of last week. And then Friday when we got the big day of selling, that would have been kind of a confirmatory bit of action there. But right now, it does feel like we're in the midst of, day-to-day price action could lead us anywhere. Ultimately, the trend line is probably the 200-day moving average. We haven't seen it since August. It would be a reasonable spot for a pullback. Doesn't mean we have to get there, but I think planning for how you want to act if, in fact, we visit the 200 on the NDX, how do you want to take action? Do you want to step in there? Do you want to devote new money there, et cetera? That could be pertinent. And of course, today's aftermarket news is going to have NVIDIA's report likely going to have an impact here on the NASDAQ tomorrow and moving forward. So levels here right around, what do we say, about 20,900, 20,525, and then 20,175 or so at the 200-day. Anything else to add here, Brent, as it relates to the NDX this morning?
I would just say that if we were to test that moving average, I don't know the exact number on that, but it would be about a 10% pullback in the market from high to there. Is that, what do we got there?
And let's find out what my note says there. Yep, 9.25. That'd be,
okay.
That would be right in line, wouldn't it?
Yeah. So that would be a really significant level. That's not. It also says it's not an unreasonable pullback. 10%. We say this every week. I think 10% pullbacks are kind of commonplace to happen in at some point during the year, and so wouldn't be a shocker.
That's the hardest thing, isn't it, Brent? We talk about this stuff every day, and when you're watching it every day, you're seeing these moves. You can get kind of lulled into this false sense of security by the lack of volatility, and then when volatility makes its way back into the market, we're reminded of what the market can do for us. Volatility, and it can be difficult to manage, can't it?
Yeah, it's really funny. We as traders, we have kind of short memories, and we each time, like when we have a big pullback in the market, you always, well, I don't know, I always say, well, next time it's going to be different. I'm not going to remember that. I'm not going to get lulled into this false sense of security when the market gives me this kind of bull market thing. And then, of course, my memory fades and whatnot. When things are going good, I kind of like discount the idea of, well, a 10% pullback when but it's, you just need to be reminded every once in a while that happens. And I think I'm not uncommon in the fact that my memory fades on that the market, we get lulled into this false sense of security, I guess.
It's true. And the hardest thing is sticking to a disciplined process. And I know it because I deal with it every single day, even still having trouble with it because, I'm looking at the rally of a position and I'm saying, well, I think it's got more legs and that doesn't, well, I don't need to raise my stops. I would do better if I did, or I don't need to take a little profit here. And then just realizing after the fact that if I just would have been disciplined and left my emotions at the door, the odds favor me doing a better job of trading and being more successful. So
Yeah, and
trying to bring that in.
Yeah, I guess one of the I'm not saying we're going to pull back all that way. I don't know, and there's a very good chance it's not going to pull back that way. But I'm just saying, you always need to have those contingent. We mentioned this earlier. You got to have the contingency plans in place there. In case.
Let's see. Thea was asking to see the 100-day here on the NDX. Let's just go ahead and throw that up for you, Thea. There you are. You're right off of that level. So maybe the 100-day providing some trend support here, coincident with the matching lows of the last month or two. So that's intriguing. Good call out there with the 100-day as always.
Yeah.
You know what? Reminder, the moving average that seems to be providing support might be the one that matters most. I don't know if it's the 100-day. I don't know if it's the validation of that ledge at 21,000 horizontal support. Often traders fall into the vein of using the same moving averages consistently. That's one process. Other traders will work with whichever one seems to be providing support at any given moment in time. I'm sure there are traders going to be positioning against these recent lows and the use of that 100-day moving average. That's a little bit of confluence there. So great call out for that, Thea. Good one there. Let's move on to the Russell today, Brent. We're getting a good bounce. We've been talking about the nature of the Russell just being pretty rough for us. Let's throw the 20, 50, 200s back up there. We did make a short-term low, but again, are we at least encouraged by the fact that we got a tail at the matching low level here that we made yesterday?
Yeah, I think that's a key level. I mean, that's when you have when a stock or index has hit a low that's only been seen once in several months, that low is going to be a significant support level. So it may not hold, but so far today it's looking good. Now, everything we talk about can change. We've got NVIDIA earnings coming up. We've got a PCE later this week. There are things that can certainly spook the market or rally the market here coming up. But from a technical level, that's the current key level on this. And so far today, nice little bounce.
Yeah, can't be discouraged by the look of it today, Brent. We are through the high of yesterday's trading level already, so we could be in the midst of a good bounce. But let's talk real briefly, Brent. If you were thinking about it from a trade standpoint, perhaps, and we were looking at this as a potential bounce, is your limitation to the confluence of the 20 and the 50 there right around 2265 or so?
Sorry, is that
the best?
That's a potential. That is a potential resistance there when we get there. And yeah, absolutely. We'll see. I mean, that's kind of a descending triangle, and that level would be a resistance level. Of course, we can break through that, but right now, that would, I think, for traders, if you're bullish on the rut, that's actually a fair move up. I know it looks, it's only, we were there just a few days ago, but that was a big candle 3 days ago that we had. So that's what, 3.5% up from where we're at. I mean, that's enough that some traders would still say, hey, look, if I'm doing something bullish here, that's enough headroom, so to speak, to take advantage of that, perhaps.
Exactly. Now, this is notable because we are in still this range trying to figure out this pattern, right? So we've got a falling indication, right? We've come off the highs. We've got lower highs, but matching lows. So the hope is that the level we've established at 2150 can continue to provide support. That will be a long-range bullish continuation opportunity if we trade through the red downtrend line on a closing basis. That'll give you the belief, perhaps, that we've got more of really the rally we've been witnessing since, again, in this case, October of 23. So a little shorter, about 15, 16, 18 months in length there. But again, that level is a very appropriate level to which we have retreated, and now we can set levels further, right? Bullishness can shift. We can become more bullish if we take out the red line, or we probably need to get more defensive in nature, monitoring our small cap positions very closely if we were to trade under 2150, because under that, things shift a bit here on the Russell, and that bears watching. Now, the Russell might be getting a little bit of a benefit here in the short term. We noted that the yields had fallen with some of the effort here of late on the bond market, Brent. The yields have come down to a major level, but it also was coincident with this discussion around a potential recession coming. So when you start bringing those things in, now the conversation shifts yet again. We were recently talking about the very clear relationship between rates and the move in the Russell, and suddenly that's not the same.
Yeah, I was going to bring up the same thing, Kevin. It is funny how things shift. Most people want rates to come down, but we kind of want rates to come down because we want inflation concerns to come down. And well, we want inflation concerns to come down not because of potential recession. That's not the reason we generally want those inflation concerns to come down. And that's kind of what's creeped in the narrative. The consumer confidence numbers earlier this week were not good. We've had some more weakening economic data. But it's not a convincing case that we're going into a recession either. So I think the jury's out on this right now, but we have seen a meaningful move on rates down. I mean, that's significant, from a 4.8 high down to, what do we have? 4.2, 4.3 right now. So that's meaningful, but we haven't seen the full move in the rut, which, just absent everything, we've said many times, the rut is the most interest rate sensitive of the major indexes. And with the move down, we'd expect maybe a little bit more of a bounce in the rut than we've seen. But we haven't, I think, just because of concerns, economic concerns there.
Yeah, I think so too. And that we have to make note of that, because, one of the things that's notable as traders is the shift in how the market acts. One of those things, for example, is the weakness in the morning followed by buying in the afternoon. That's not necessarily a terrible thing. Sure, we don't like moves lower, but it's nice to see when you open lower that we get bounces as opposed to opening lower and selling off. We can use the way the market acts as we make those moves. We can use that to our benefit. We can use that to understand the nature of the market at any given moment. Okay, so Brent, after moving off of the Russell, let's look at the semis setting up ahead of tonight's report on NVIDIA. We remain pretty much just rangy here. And I'm getting more and more inclined to call it exactly that. We go back to September now. So we're looking at all of September, October, November, December, and thus far into basically the end of February. We're looking at a 6-month sideways range here. Really, there's no reason to trade anything outside of the red or the green lines at this point, is there?
Yeah, I agree. Sometimes, like when we were looking earlier, and I said, well, the rut has a potential move up, but the intermediate term trend was down. This is not a downward trend intermediate. This is just a sideways channel. And so one approach traders take is they kind of focus on the trend. In this case, we don't really have a trend. So really the focus becomes support and resistance levels. When you're closer to support, a lot of traders will look at that as a potential buying opportunity. When we're closer to resistance, vice versa. And, you see this reflected in the moving averages. The moving averages basically don't mean that much right now. They're just kind of going flat. And the index is going above them and below them without much. They're not really acting as much in the way of support or resistance here for us right now. But we are near that support level. But the big but is we have NVIDIA, which is a huge move, factor in this, coming out with earnings. So sometimes when you have a support level, it can, or a resistance level, the kind of the impetus to push it through can be an earnings. And since NVIDIA is a big enough component of the SOX, if we had a negative earnings on NVIDIA, it could potentially break that channel to the downside. It'd have to be a pretty super strong earnings from NVIDIA to break it to the upside, I think, just because there's enough headroom there before we get to the resistance level, though.
Yeah, and you know, the other thing that jumps out on this chart to me is just a reminder of why we do why we look for confirmation. Two things: the two times we popped through the red line were very brief in nature. 2 days here, 2 days before the third day was sold down, and then we got a gap move to the bottom of the range. Down here, what I think is notable, Brent, is how we get down to support and we get these tails. And again, if you draw these lines on your charts, everybody, and then you start looking at your intra-period charts and you notice, oh my goodness, we're trading through that green line to the downside. This is an important level intraday now because we're at the green line. That was support for the last few months. Do buyers step in here? And if you get buyers to step in, you get this nice indication with that real hammer candle, the tail, telling you that there was a sentiment shift at the bottoms there. That's really instructive. And a lot of traders, they may not start with full positions off of, potential bounce zones like that, but they might get started very small position size just to put themselves on the trade, right? And start giving themselves something to keep an eye on. The move, interestingly enough, if you'd have been a buyer based on that hammer candle day, even at the high, and you only stuck with it because you didn't break down, that still would have been a fine 9% move over the course of about almost 4 weeks. I mean, that was a wonderful bounce in the space. And I just think that's a good reminder of why we think about this stuff as frequently as we do, right? Day to day, you got to look at your charts, you got to know your levels. Very, very important. Brent, a couple of other areas that I wanted to get to today, a couple of notable sectors moving that are kind of letting us know some things. The first two are defensive in nature. We had a breakout yesterday in staples. So let's take a look.
Yeah.
Oops, that's the discretionary. We'll talk about that in a second. This is what we were talking about, needing to get through. And earlier, I think it was Monday, I talked about this maybe looking like a cup and a handle, with the handle being a little bit higher than traditionally. And nonetheless, it's played out bullishly this week.
It has played out bullishly. And even if you look at this more from there's your resistance level, and going back to what you mentioned a few minutes ago of looking for confirmation, this is what we like to see in terms of that. We went up, we bounced, and then the initial move through a couple weeks ago was questionable, suspect, so to speak. We came back down, bounced basically off of that 20-day moving average, and now we've shot well above that. So that's a pretty strong move in Staples. Staples is kind of a defensive type sector. And so, we mentioned earlier the whole economic downturn type scenario. Well, these are the kinds of sectors that tend to outperform if that were to come about.
It's true. Yeah. Again, understanding the makeup of the market, understanding the relationships we get from the market, defensive group like Staples, commonly like healthcare as well, you'll see outperforming in periods when we have lagging in growth stocks in particular, technology stocks as well. So you can not be surprised by these, but take note, because leadership from Staples changes the makeup of the market a little bit, right? It tells us that we are not being necessarily led by your high growth technology level companies, but rather more stability, right? Flight to safety is kind of the thought process, if you will. Now, the white line I drew on here, everybody, this was the potential measured move target. I always like to bring these up just because we've broken out of a range we traded in. If we go back and really when we began the range, July of last year, so you're looking at a range of about 7-8 months in length, and we took just the height of the range. I drew the line from the top to the bottom and then added it to the top. That gives you an estimation of a potential price target from a technical viewpoint. Doesn't mean it gets there, but that's the thought process some traders might use to employ if they're looking for a way to trade out of staples at the upper levels, it might be a target zone around 970 on this particular index. So the only other thing that I wanted to touch on here, it was a question in the queue, Brent, was about my tools, because I've been utilizing these tools. These are pinned right here. The reason that they're here, though, is because of a shift I've made on my charts, everybody. So let me just show you this real quick. It's the gear icon, and my tools is on the first general tab when you click on the gear, and it's this option here. Now, by default, it shows up on each chart, and then it's actually a bit of a shadow along the top of your chart up here. In my case, I like that detached in a single panel view, and that allows me that I can move wherever I want. I've pinned it to the front of my monitor, so it's right now always there. And as you can see, I've got my various study details. So if I just want to see a 10-day or just a 20 or just a 50, I can. Or if I want to see the 200, the 20, 50, 200 and throw up the returns on there, I can see those as well. So it's a really quick way for me to get the draw details I want or the study details I want without having to go about the process of adding them in independently, Brent.
Yeah, I just say amen to that, Kevin. I love the tools. I actually usually just have them on the top of my chart. Doesn't matter. It's just I've kind of gone back and forth between what you have there and just having them pinned to the top of the chart. Doesn't matter. Yep. Whatever fits you best. But just the thing on those tools, you can add studies, you can add study sets, you can add styles, you can add drawing tools, and you can switch up different time frames up to just for quick access. Customize it to what you want, whatever you're going to use. And what I'm going to use is different than what Kevin uses and whatnot. And that's great. And so make it, and the great thing is that's been around for a while, but it was kind of limited because they used to limit you to 7 spots. Yeah. Well, they've expanded that, and now there's a lot of spots. I can't remember how many they have now, but there's a whole bunch. And so play with it and see if that works for you.
Yeah, I couldn't agree more. I know it's well over 10. I think somehow it's over 20 buttons if you wanted them. So
yeah, something like 20 or so.
Yeah, for those of you looking for ease of navigation and a process that'll make it really simple to get your studies added or what have you, this is just one option. The alternative is use the grid or something like that and create various grids that are easily accessible as well. A lot of good ways to do this, but that's my favorite thing about this platform. Thinkorswim is so open to really the way you prefer to work, however that is. Odds are it's in your favor that you can get done what you want to get done in a manner you want it to happen. Just a matter of playing with it a little bit. Generally, just takes a little bit of time. So, okay, so we've looked at staples, Brent. Let's look at healthcare real quick. It is down a little, but there's been a bit of a shift here. We've been talking about. I've been calling out the 20-day moving average as former resistance, now potential support. Broke down last week, but boy, we've recaptured it, and we are looking at a potential breakout from here, aren't we?
Yeah, and that's a pretty strong move we've had since December. Initial sell-off. This was an industry that didn't, it was kind of the opposite of the Trump bounce or whatever. It did not fare well initially, but it's since been recovering, and so, yeah, that would be a key level for traders if we were to break above that. Again, kind of more of a defensive type sector. Not, it's probably not as spectacularly bullish right now as the staples, but it's looking pretty strong with that one little resistance level. That would be, I don't know, it's maybe not even that super strong resistance, but it is a key level, I think, for traders if we were to break above that.
I think so too, and I think they'll be monitoring this ledge next if we can manage to get through this one. This zone up here at around 1765 looks like a potential pause spot. But I think the real takeaway is the improvement here, and we're looking at hopefully some kind of confirmation of holding the 200-day in blue. If we make new short-term highs, it's likely we'll see the 20-day crossing the 200 to the upside. So you've got potential then to utilize maybe the 20-day if it could start trending here. But even this pullback was 1 day, 2 day, and then day 3 it was closing at or above the 20 days. So these pullbacks have been limited since the shift here in the healthcare space. So it's been improving over the last 6 weeks or so. Again, my tools, everybody, is gear, and then the lower bottom right down here, my tools. Again, default is going to show you on each chart. If you want it in you might want it in a single panel like this, so that you can build it out for yourself. And then remember, there's not a linkage here to tie to which chart gets these actions. So whichever one was the one you had most recently activated and utilized, that's the one that this links to. So it's not linking per se with your chart via the number button, for example. So keep that in mind. It's just based on whichever chart you were most recently actively using. Okay, so look at healthcare, look at staples. The opposite move has been with discretionary to the, oops, that's the wrong one. Discretionary, there we go. Had been to the downside, did make a significant move through resistance, or what was support, now potential resistance. But Brent, we're trading through the high of our potential low day. If this is the low day, could this be, an opportunity for a bit of a bounce back into some semblance of resistance near us here?
It could, but keep in mind the shorter term trend has been going down though, and so that doesn't mean it couldn't bounce, and it doesn't mean it could change its trend. But even a bounce up may be just a bounce into a resistance and a subsequent kind of a bear flag, if you will, a bounce into resistance and a bounce down from there. So we'll have to wait and see on that. But certainly, this is kind of the theme of the day almost, Kevin. We've seen all these kind of hammer type candles yesterday where we tested a low and we closed up near the, towards the top of the day. And following up today, so far so good, I guess is what you'd say so far. So that's a nice little bounce.
It is, but I'm also a little dubious of it because what we're seeing is a change, right?
Yeah.
So we fell through support. If this is a more significant breakdown, then the bounce could be short-lived. Even though it could be positive, it could be counter-trend positive, and you might be getting a bounce into maybe we get to the 20-day, maybe it's not the 20, maybe it's only the 10-day because there's been some speed. Look at this, Brent. We broke the 10-day back on February 3rd. Basically, we've been below it all month. And we had 1 day where we rallied back in the next day, and it's just been below it since. So maybe any bounce is quite short-lived. In fact, I think bulls would tell you, Brent, only after we recapture the 10-day are they going to feel as though this trend on the longer range is reasserting the bullishness. I think that's the level we got to keep an eye on. You?
Absolutely. That's the key resistance level. And you see kind of this confluence of the 10-day and, well, your resistance level you have, older support level you have. Those are kind of coming together right there. So I think that's the key level.
I think so. Okay, well, that gives us plenty to keep an eye on as it relates to what's happening there in discretionary. One of the big animals there in discretionary that's been dragging it down, unfortunately, has been Tesla of late. It's been following a short-term downtrend. That 20-day's been working. I think the 10-day has also been working here. The position is just rough under the microscope now more than ever because of Mr. Musk's, being out and about and being part of the Doge conversation and with the administration. But this has been a real drag, unfortunately, on the discretionary space.
Yeah. So because of the representation in discretionary between Tesla and Amazon, those are the huge behemoths in discretionary. Those are the big companies there, and they're going to have this huge impact on the discretionary sector there. Mm-hmm. And so you see that in these different sectors is just, one or two stocks make up most of the sector. The majority of the discretionary sector is Amazon and Tesla, just those two stocks in terms of the influence there. And so when Tesla gets hit, and it's been getting hit, I mean, from high to where we're at now, that's I don't know what that pullback is, but that's a big pullback percentage wise. That obviously that's going to drag that discretionary sector down.
Yeah, not great. About 37-38%, unfortunately. More notable than anything else could just be the levels we're looking at. This is the following the election level, by the way, the gap on November 6th. Any reason now, Brent, we couldn't revisit that? I think a lot of traders are thinking at this point, why couldn't we? Why wouldn't we see that 275, a full round trip move, 275 to 488 back to 275? That's entirely possible, isn't it?
I see no reason why we couldn't visit that. Yeah.
Yeah, totally. It's at least on the table as a possible move. Okay, a couple other positions in the news today. Everybody wanted to quickly hit up Supermicro. They apparently were able to get their details to market yesterday late, filing their 10K, their delayed 10K late yesterday, and they have made a nice little bounce here. You'll notice yesterday they closed pretty well down here around 43, 44, and have made a 20% pop, recapturing the 200-day moving average. My levels are pretty well set in terms of former support, former resistance. I think traders may be now looking just to see if they can get right back to the peak they were at just last week.
Yeah, this is just the epitome of a volatile stock. You know, for those of you who don't remember, go to like a two or 3 year chart there on that, Kevin.
You got it.
Let's go. You'll see
a couple years.
You'll see what we're talking about here on that. Like, so it had this huge run up, and big pullback, kind of consolidation, and well, we've turned a little bit more bullish here on this. For those of you who don't remember, they kind of reported, oh, we're going to miss reporting our earnings and whatnot. Our accounting isn't in line right now. And that's always the death knell for, that's always a really bad sign for a stock when that happens. And sure enough, the stock got very punished. And very often, it's not something companies recover from. Sometimes that, it leads, that's the beginning of the end of the company. Well, they seem to have recovered fairly well, and that's what Kevin alluded to when he said, they finally got out those, as they said they would, and so it looks like maybe they're righting the ship a little bit in that regard. So we've seen the nice little bounce there on SMCI, but when you are trading, be aware of the volatility of the stock that you are trading, because that can impact the nature of the trade. There's blue chip stocks out there. It doesn't mean that they can't go down. It doesn't mean that they're safe by any means, but the typical moves in them, you take a company like Coca-Cola or something, Coke, right? It certainly can go down, and it's seen hard times at times, but it just doesn't move anything like, or most of the other Dow stocks, it doesn't move anything like something like SMCI.
Right. That's true. And the other thing that I want to add here, Brent, I'm going to draw a line in, but I'm going to do it, and I'm going to then talk down the reasoning for drawing it. So here we had a broken downtrend line. That's all well and good. We all love technical details that can give us a little bit of a heads up. But this story is tied so much to the potential of accounting issues, fraud, etc., that we don't know anything in truth. I don't even know if what they provided yesterday with their filing is considered to be valid. The market's okay because they're not getting delisted. That's a big deal, right? But this, you can throw technicals out the window in many cases when it is a news and narrative driven scenario, news as it relates to fraud and audits relative to their balance sheet. That is bad detail. Now, you can take all the technicals you want, and you can apply them however you want and how consistently you've used in the past, and it may not even matter. So keep that in mind, everybody. Regardless of what you get from the technicals, news and detail like this will absolutely drive price action, and it can put you in a difficult spot if you're over invested. So just please keep that in mind. Not every position really needs to be notable or held, right? We don't have to trade every one of these opportunities, and some of these are real questionable to say the least. Brent, anything else you want to add here?
I would just add, when you're trading a stock or do any kind of trade, kind of have it in your bucket of how speculative it is, and that may impact how big a portion of it is in your portfolio. And just realize that, and don't confuse the more speculative with the more conservative investments. Doesn't mean you can't have speculative investments, and it doesn't mean conservative investments can't, bite you in the rear end there. But just keep in mind those relative categories, how you're going to categorize those in your whole portfolio.
Mm-hmm. Yeah, keep just recognize the level of speculation that comes with, right? And then thus speculation investments equal small percentage investments, hopefully.
Yep.
And I noticed, Brent, we got some survey opportunity in the chat today.
That's what I was about to say. So I'll let you continue with that.
Excellent. Yeah, survey opportunity there in the chat. You'll see the link at the very bottom here, everybody. Click that link. It'll open in a separate browser window for you. Brent and I would love your feedback. We always appreciate it. Try to bring your commentary to our next conversations as well. So believe me, those notes are read and appreciated, everybody. Follow the three of us on X, Cameron May, CS, Kevin Horner, CS, Brent Moores, CS. And please hit that thumbs up button down below for us once more. Really helps us out as we get this out to the masses once we get it reviewed and ready for the archival. So thanks again, everybody, for being here. Big thanks to Brent, obviously. Big thanks to Cameron there in the chat. Much more to come from us today. You can keep it tuned right here to the YouTube coaching channel. But we hope you have a fantastic rest of your Wednesday, everybody. Look forward to seeing you all again real soon.